Unlocking Millionaire Secrets, S&P 500, and Warren Buffett. Imagine waking up one day to find that your investments have made you a millionaire. It's not a fantasy, it's the reality for countless people who've harnessed the power of the S&P 500, an investment strategy championed by none other than Warren Buffett. Warren, a guy who eats the same thing for breakfast every day and still lives in the same house he bought decades ago, is considered one of the greatest investors of all time. His secret? Consistency and patience, especially when it comes to the S&P 500. He's been preaching its potential for years, and for good reason. The clock is ticking, and the path to financial freedom is right in front of you. In this video, we're diving deep into the world of the S&P 500, revealing the secrets to building wealth, just like Warren Buffett. The Oracle of Omaha's secret. Why Warren Buffett loves the S&P 500. Warren Buffett, one of the most successful investors of all time, has always emphasized the importance of investing in the S&P 500. But why? What is it about this collection of 500 of America's biggest companies that has captivated him for so long? The S&P 500, my friends, is like owning a tiny slice of the American economy. It's a diverse portfolio of companies, from tech giants like Apple and Microsoft to healthcare behemoths like Johnson & Johnson. When these companies thrive, the S&P 500 thrives. And guess what? Over the long haul, the American economy and the stock market that reflects it tends to go up. Think of it like owning a piece of every pizza place in America. Some might close, some might do okay, but some will absolutely explode in popularity. It's diversification, and it's the reason why Buffett loves this strategy. But here's the thing. You don't need to be a financial whiz to get started. You don't need to be analyzing complicated spreadsheets or spending hours poring over annual reports. With the S&P 500, you're essentially betting on the long-term success of the American economy. And let's be real, the American economy has a pretty darn good track record. It's like betting on a horse that's won the Kentucky Derby for the past century. Sure, there will be bumps along the way. Recessions, market crashes, maybe even a pandemic or two. But history shows us that over the long term, the market goes up. This isn't about getting rich-quick schemes or timing the market. This is about slow, steady growth, about watching your money work for you while you sleep. It's about building a future where you have the financial freedom to pursue your passions, travel the world, or simply enjoy the peace of mind that comes with knowing you're financially secure. So, if you're ready to unlock the secrets to building wealth, just like Warren Buffett, stick around because we're about to dive deep into the power of compound interest and how it can turn your financial dreams into a reality. The snowball effect. How compound interest supercharges your investments. Compound interest is like planting a tree. The earlier you plant, the bigger it grows. And the S&P 500 is fertile ground. Let me explain. Imagine you invest $10,000 in the S&P 500 today. Let's say, hypothetically, it returns an average of 10% per year. Now, I'm not promising those kinds of returns, but historically speaking, it's not out of the realm of possibility. After the first year, your investment grows to $11,000. Not bad, right? But here's where the magic of compounding kicks in. The next year, you're not just earning 10% on your initial $10,000, you're earning 10% on the entire $11,000. Fast forward 10 years, and that $10,000 has almost tripled to nearly $26,000. That's the power of compound interest. It's like a snowball rolling down a hill, getting bigger and bigger as it goes. Now imagine you're in your 20s, just starting out. You might be thinking, investing? That's for later when I have more money. But let me tell you, every day you wait is a day you lose out on the magic of compounding. Let's say you invest $5,000 a year from age 25 to 35. That's it. Just 10 years of consistent investing. Assuming that same 10% average return, by the time you retire at 65, that money could potentially grow to over $1 million. $1 million from just 10 years of investing. That's the power of starting early. It's not about how much you invest. It's about how early you start. The earlier you plant that money seed, the more time it has to grow into a mighty financial oak tree. But what about those of you who are a little later in the game? Don't worry, it's never too late to start investing. Every dollar you invest is a step towards a more secure financial future. Chapter 3. The Fear of Missing Out. Why waiting is costing you thousands. Every day you wait is a day you lose. The fear of missing out is real, and the earlier you start, the better. The stock market can feel intimidating, especially when you see headlines about crashes and corrections. It's easy to get caught up in the fear and think, I'll wait until things are more stable. But here's the thing, timing the market perfectly is nearly impossible, even for the pros. The stock market is like a roller coaster. There will be ups and downs, twists and turns. But just like a roller coaster, it's the thrill of the ride that ultimately matters. And the longer you're on that ride, the more likely you are to come out on top. Think of it this way. Would you rather miss out on a roller coaster because you were too scared to get on, only to watch everyone else have the time of their lives? Or would you rather buckle up, embrace the ride, and experience the thrill firsthand? The fear of missing out is real, and it's costing people real money. Every day you wait is a day of potential growth that your money misses out on. It's like leaving your money sitting in a savings account, earning a measly 0.01% interest. Sure, it's safe, but it's not growing at its full potential. The S&P 500, on the other hand, is like giving your money a chance to work hard, to grow exponentially, and to build a future where you're not just surviving, but thriving. So, how do you overcome the fear of missing out? By taking action, by educating yourself about investing, by starting small, and by consistently investing over time. Remember, the stock market rewards patience and consistency, not fear and procrastination. Chapter 4. From College Grad to Millionaire, John's S&P 500 Success Story. Take John, for example. He followed Buffett's advice and started investing in his 20s. Today, he's living a life of financial freedom. John was a regular guy, fresh out of college with a mountain of student loan debt and a dream of owning his own home. He was working a 9-to-5 job, living paycheck to paycheck, and feeling the weight of financial stress. One day, he stumbled across an article about Warren Buffett and his philosophy of investing in the S&P 500. Intrigued, John decided to learn more. He read books, watched videos, and even attended a few investment seminars. He started small, investing just $100 a month into an S&P 500 index fund. It wasn't easy at first. He had to make sacrifices, cut back on unnecessary expenses, and stay disciplined with his budget. But John was determined. He knew that the key to building wealth was to start early and stay consistent. He treated his monthly investment like a non-negotiable bill, just like his rent or utilities. Years went by, and John continued to invest consistently, riding out the market's ups and downs. He watched his portfolio grow, slowly but surely, fueled by the power of compound interest. Fast forward to today, John is in his early 40s and he's a millionaire. He owns his own home, has a healthy investment portfolio, and is living a life of financial freedom. John's story is a testament to the power of the S&P 500 and the importance of starting early. It's a reminder that you don't need to be a financial expert or have a lot of money to get started. All you need is the discipline to invest consistently and the patience to let compound interest work its magic. Chapter 5. Your Path to Financial Freedom. Actionable steps to start investing today. So, how can you start? It's simpler than you think. Here are the steps you need to take right now. First things first, you need to open a brokerage account. Think of this like your investing hub, the place where you'll buy and sell your S&P 500 investments. There are tons of options out there, from traditional brokerage firms to online platforms like Robinhood or M1 Finance. Once you've got your account set up, it's time to choose your weapon, or in this case, your S&P 500 investment vehicle. The most common and arguably easiest option is an S&P 500 index fund. These funds simply track the performance of the S&P 500, so you're essentially buying a tiny piece of all 500 companies. Now comes the fun part. Investing. Decide how much you can comfortably invest each month. Remember, start small if you need to. Even $50 a month can make a difference over time. Set up automatic investments so you don't even have to think about it. This is crucial for staying consistent and avoiding the temptation to spend that money elsewhere. And finally, be patient. Investing is a marathon, not a sprint. There will be ups and downs in the market, but don't panic sell when things get bumpy. Remember, you're in it for the long haul. The S&P 500 has a proven track record of delivering solid returns over time. By investing consistently and staying the course, you're setting yourself up for a brighter financial future. The S&P 500 is a powerful tool for building wealth, but is it the only path to financial security? We've seen how John used it to achieve his dreams, and how Warren Buffett himself swears by its long-term potential. But what if the S&P 500 isn't the only way to to secure your financial future? What if there are other investment strategies out there, hidden gems waiting to be discovered? Check out our next video on Is Gold Savings the Smart Investment to explore more options and diversify your portfolio for maximum financial success.